House price growth slows sharply with some capital cities now going backwards. The local share market hits another record level, and Aussie CEOs believe work from home will be over within 3 years. Welcome to Fear and Greed, daily business news for people who make their own decisions. It's Tuesday, the 1st of October 2024. I'm Adam Lang, and good morning, Sean Aylmer.
Good morning, Adam. Quite an auspicious day to have you hosting this show with me. Michael's got the day off, but, the first day of the quarter, very appropriate, I think, Adam.
Training wheels. We'll see how we go. Give me a mark at the end of the show, Sean.
With pleasure. Go on.
The main story this morning, Sean, house price growth in several major cities, including Melbourne, has stalled as the market cools on the back of ongoing high interest rates.
In the first month of spring, dwelling values rose by just 0.4% across the nation, taking the September quarter rise to 1%. 4 capital cities recorded a fall through the September quarter, led by Melbourne, where values were down more than 1%. Canberra, Hobart and Darwin also went backwards. While Sydney home prices for the September quarter were up 0.5%, it was the slowest pace since the beginning of last year. The mid-sized capitals, which have led the pace of capital gains through most of the upswing, are also losing momentum, even though they're doing much better than places like Sydney and Melbourne. Perth values were up 4.7% during the third quarter. Sounds good, but the June quarter it was 6.2%, so certainly easing. The quarterly gains in Adelaide look to be topping out with a 4% rise through the quarter, and Brisbane's quarterly growth has eased back to 2.7%. This is all according to CoreLogic. One of the key reasons for the sluggish price growth is the supply of homes on the market. Across the nation, they're up more than 3% on last year. They're nearly 9% more than the 5-year average, and we're seeing that with auction clearance rates falling. The oomph, Adam, has really come out of the housing market.
So interesting, Sean. Now, if the buying and selling market is slowing, what about the rental market?
Well, the heat's definitely come out of that one as well, with the National Rental Index up by just 0.1% in the September quarter, the smallest change in 4 years. Probably the main reason for that is the slowdown in migration, but all these homes on the market will keep downward pressure on rents. Good news for a lot of people. Certainly higher interest rates are cooling the national auction market. It's hard to see that turning around until interest rates in Australia start falling. The Reserve Bank says that won't happen until next year. So that's probably the best guess at this point.
So, Sean, that's good news for renters and buyers, maybe not for property owners. Let's move to the local markets. How did they perform yesterday?
The S&P ASX 200 hit a new record yesterday of 8,285.2 points before finishing 0.7% higher for the day. That final number was 8,270 points. For the September quarter, the index was up 6.5%. That's a pretty good go. Materials and energy stocks led the way yesterday as the price of iron ore continues to rise and oil bounced. BHP rose 2.5%. Fortescue Metals was up nearly 3%, and Rio Tinto finished 2% higher. Woodside and Santos, the energy giants, they both jumped 3%. The big banks were mixed, while Telstra was the worst of the large caps, finishing down 1%. Casino group Star Entertainment was the best performer of the top 200, finishing up 19%. Mind you, it fell 43% on Friday, so it's only recouping some of those losses. And there might be industrial action going on at Qantas among the engineers, but that hasn't hurt the national carrier share price, which is trading near a record level. In corporate news, Liontown Resources jumped after completing its first shipment of spodumene concentrate to China and starting spot sales from its Kathleen Valley project in Western Australia. New Zealand's Synlait Milk also rose despite posting a massive net loss for the last financial year, and dental group Pacific Smile slipped slightly after its board rejected a takeover bid from Genesis.
Sean, a record on the local market. What's happening in international markets?
Well, it's about commodity prices at the moment. Now, oil prices jumped after Israel's attacks in Lebanon and Yemen, while iron ore futures are now trading above $110 a tonne. Yesterday's surge followed 3 of China's largest cities easing rules for home buyers over the weekend. Of course, last week, Beijing came out with stimulus for the economy more broadly. The Aussie dollar is having a good time of it, pushing towards 69.5 US cents. As we've discussed before, the Aussie is considered a commodity currency, and so higher commodity prices pushes the local dollar higher. In economic news, China's manufacturing activity shrank sharply last month as new orders at home and abroad cooled, pulling down factory owners' confidence to near record levels. That's according to a private sector survey that was released yesterday, just demonstrating how much Beijing needs to do to reinflate that economy.
Sean, immediately after the show, we want everyone to stay listening for your chat with Jackie Emery. She's the CEO of charity Royal Far West. Tell us about the chat.
Yes, Jackie runs a charity that involves children. It's a children's charity. It works across the country. Times are quite tough out there in charity land just because people are finding it tough. They're not as likely to give money, but the need is as great as ever. And we talked to Jackie about that.
Fantastic. We'll be back in a moment with the rest of the day's business news. Sean, the federal government's coffers are looking better after a cut in spending helped boost last financial year's surplus, though another one this financial year is looking unlikely.
Federal Treasurer Jim Chalmers yesterday said the final budget position for the 2023-24 financial year was a surplus of $6 billion, and that better than expected outcome came from reduced spending rather than higher taxing. This financial year's deficit is forecast to come in at about $28 billion, but that's down from initial estimates of $47 billion, a big improvement. Dr. Chalmers said the $172 billion turnaround in 2 years was the biggest nominal improvement in the budget in a parliamentary term ever. He said debt's been reduced by about $150 billion, which means something like $80 billion less in interest payments on that debt. All very true. The bad news, personal income tax topped $331 billion, or 52% of the federal government's total tax take last financial year. Now, that was due to strong employment growth and bracket creep, but as a percent of total revenue, income tax is now far higher than ever before. GST, which was supposed to grow with revenue, the share it provides to revenue is actually falling.
So interesting. So look, that's the good news on the budget front, Sean, but it isn't quite as positive on the productivity front. And you know that's a favourite of mine.
It is. Yes, productivity levels have fallen, with labour productivity returning to the weak trend in the years before the COVID-19 pandemic. Amid a surge of workers entering the care economy, labour productivity fell by nearly 1% across the economy in the June quarter, according to the latest quarterly report from the Productivity Commission. In the year to June 2024, productivity rose by a modest 0.5%. Now, Deputy Chair of the Productivity Commission, a guy called Alex Robson, said it marks a return to weak productivity growth. That's bad news, because productivity growth is a way of alleviating inflation. Professor Robson said Australia's productivity deadlock has persisted through two very different economic environments, one pre-COVID and one post-COVID. It suggests policymakers need to pay closer attention to the deeper structural issues at play.
Sean, Prime Minister Anthony Albanese has warned that Australians do not want radical ideologies in the country. How did that come up?
Well, he said the government continues to call for a de-escalation of the conflict in the Middle East. He was speaking ahead of a cabinet meeting yesterday and following pro-Palestine protests on Sunday in Melbourne and Sydney. The protests were allegedly gate-crashed by pro-Hezbollah protesters waving flags of the terrorist organisation. Mr Albanese said what happened was worrying, and Australia does not want people to bring radical ideologies and conflict here. Foreign Affairs Minister Penny Wong condemned any support for terrorist organisations such as Hezbollah. She said it threatens national security and fuels fear and division in communities. Opposition leader Peter Dutton called for the Hezbollah flag wavers to be arrested.
Sean, Macquarie Bank and Commonwealth Bank are winning market share in the mortgage market as competition heats up.
So Macquarie and Commonwealth Bank are expanding their mortgage books at a far faster rate than their rivals, using competitive pricing and big cash incentives to drive interest. Data released by the Australian Prudential Regulation Authority shows Macquarie was the biggest winner, having added $1.9 billion to its loan balances in August alone. CommBank remains the country's largest residential lender. It's got $564 billion of loans on its books, massive. Westpac's at 475, ANZ 303, National Australia Bank 320. NAB's loans rose less than 0.1% in August after falling in July for the first time since October 2020 as competition intensifies. This is significant that the Commonwealth Bank is winning market share because it's the leader of the market. So once it gets aggressive, it tends to drag the rest along. Now remember, last year, the Commonwealth Bank's share of market actually went backwards for 2 quarters. No one thought they'd keep that up. Well, they haven't. They've gotten aggressive again. The winner in all this, of course, are people taking out home loans.
Competition is a good thing, Sean.
Always.
Australian CEOs believe the COVID-era working from home phenomenon will be over in 3 years and are rolling out promotions and pay rises in a bid to get workers back into the office.
That's the conclusion of KPMG's latest survey of the nation's chief executives, as reported in The Australian. More than 4 in 5, or 82%, of respondents expect traditional white-collar roles to fully return to the office within the next 3 years. This is a significant increase on the 66% who were of that opinion when surveyed last year, and comes as businesses like Tabcorp and the New South Wales government increasingly wind back work from home rights. Only 27% of respondents expect hybrid office home roles to continue. No one expects jobs to be fully remote. Australian leaders' opinions are in line with their global peers, of whom 83% predict a full return to office-based work for white-collar employees within 3 years. What I find interesting here, Adam, is how quickly it's changed. I think 12 months ago, definitely 2 years ago, we thought hybrid was here for good. Now 4 in 5 CEOs reckon that it's about to end.
Do you reckon that applies to us, Sean? Would you call us white-collar workers?
You are, I'm not.
Do I have to go to the office then?
That's what I'm saying, yes.
Okay. All right, Sean, the ratings are in, and the Brisbane Lions' 60-point drubbing of the Sydney Swans in the AFL Grand Final delivered free-to-air broadcast at Channel 7 its biggest audience for a premiership decider in 8 years.
Are you over it, Adam? This story is specifically for you.
No, I'm not. It'll take some time, Sean.
For listeners who don't know, Adam is a mad Swans supporter, and last week we had to put up with him wearing the Swans jersey into the office, and oh my word.
So one of my sons, Sean, said to me, Dad, there's been 5 grand finals that the Swans have been in since I've been alive. I've seen 4 losses.
So haven't they been in like 7 in 20 years and they've only won 2? Is that right or something?
Yes. Successful in getting there, but still with work to do. Always next season, Sean.
Always. The official ratings data released by OzTam show 4.024 million viewers tuned into the grand final, including 655,000 viewers on Seven's free streaming platform 7+. It's the highest AFL Grand Final TV audience since the 2016 clash between the Bulldogs and the Swans. Saturday's ratings represent a good result for Seven, given that the game, Adam, was a blowout. Let's be honest. 3/4 time was all over. I mean, half time was just about all over, to be honest. What's kind of interesting is the 4 highest rating AFL Grand Finals of the past 20 years have all featured the Sydney Swans. I'm not sure whether they won any of those. They might have won one of them, I think, looking at the numbers.
2012, here. Sean. Wonderful victory.
Am I allowed to admit that on the weekend there were 3 football codes? There's obviously the Swans-Lions game. Then there were the Wallabies All Blacks game in rugby. And then in rugby league, there was the Penrith Panthers versus Cronulla Sharks. Yeah. At some other time in my life, I reckon that would have been 8 hours of viewing for me. I did not watch 1 minute of any of them. I know. I know. What's happened?
I think I did the heavy lifting for both of us then.
So on average, we're about normal. Good.
All right, Sean, in international news, Israel has launched a wave of airstrikes against Houthi rebels in Yemen, dramatically widening its offensive against Iranian-backed militants.
It came 2 days after assassinating Hezbollah leader Hassan Nasrallah in Lebanon. The Israel Defense Forces said the attack against the Houthis involved dozens of warplanes and targeted power plants, ports and other infrastructure. Israel also launched dozens of fresh strikes in Lebanon and vowed to keep up its offensive against Hezbollah, according to the Financial Times. Over the past 2 weeks, Israel's offensive has killed more than 1,000 people across Lebanon. The Houthis have launched missiles and drones at Israel, merchant shipping and US naval vessels in the Red Sea ever since October 7. That, of course, is when Palestinian militant group Hamas attacked Israel. Now, Hamas is a fellow member of the Iran-led Axis of Resistance.
It's incredible, Sean, isn't it? It's nearly a year since this happened and it still seems to be escalating.
Yeah, it's very scary.
Sean, moving to a very different topic, an increasingly popular gym franchise in Japan is now offering teeth whitening, manicure equipment and photo booths as it pushes to provide services that have little to do with getting fit.
Who would have thought the gym was about getting fit? Now, I have recently joined a gym and I used to go to F45 and you'd go there and you'd work. Now I joined it. It is amazing how many people sit around gyms. And you got the benches.
Do
They're on their phone. They sit on the bench
Oh, my
looking at their
word.
phone. I'm like, get out of the way. I want to be here for 30 minutes maximum. Anyway, maybe it's called Choco Zap. CHOCOZAP.
Okay.
They call it a patchwork concept. And it's run by a $1 billion fitness company in Japan that made its name in high-end personal training. Now, in less than 2 years, the sub-brand, ChocoZap, has tapped into a casual and frugal gym user base with more than 1,500 locations and 1.2 million plus customers, according to a report on Bloomberg. Typical memberships in Japan's gym industry around $60, $80. ChocoZap is charging $20. The gyms were initially created as an experiment during the coronavirus pandemic when personalized training was suffering, but it has grown since then. Now, as people spend more time working flexible hours and at home, they're also seeking out more enriching experiences while keeping fit. That's according to the gym. Mind you, I don't know how they're keeping fit when they're getting their nails done. That's beyond me. They're not full service, mind you. Like, they don't have showers because most customers stop on their way home or they pop in for light exercise. That's what they say. Anyway, maybe only in Japan, a gym franchise where fitness has little to do with it.
I love a disruptor model, Sean, but it sounds a bit like creche for adults.
Yeah, I think you're right. That is actually well done.
Sean, up next is your interview with Jackie Emery.
All about Royal Far West, the children's charity, how they're performing, how the charity sector generally is performing. And it's pretty tough out there at the moment. Jackie tells us all about it.
Look forward to that. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Adam.
It's Tuesday, the 1st of October, 2024. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, X, TikTok and Facebook. And please have a great day.